Hi guys, and welcome to another Forex trading educational video. And in today's video we are going to be looking at different chart patterns, namely the bearish flag, the rising wedge and the triangle. We are going to be discussing how you can view them in the market, how you can analyze them and how to trade them. So let's start with the bearish flag setup. And as you can see, this is the Australian dollar Japanese yen chart on a 1 hour time frame. And for those of you guys that don't know how a bearish flag works, it is a trend continuation pattern. So we expect price to continue lower when the chart pattern breaks. And to draw the bearish flag, we first have to connect the bottom trend line, the bottom of the flag, like that, connecting as many candles as possible. I'm just gonna make a copy of this trend line and you set it there at the top of the flag, connecting as many of the highs as possible. And if you can't see the flag, don't worry, we're gonna draw the flagpole from this high to the bottom of the trend line over there. So this is your bearish flag, the flagpole, and this is your flag. And how you go about trading this trend continuation pattern is you wait for price to close below the most recent support area in the flag. And as you can see, this is a support area, support, and this is the most recent support over there. On the flip side, this is a resistance, and resistance over there. So I'm just going to put a line at this support area over there. So when the candlestick closes below this support area, then that is your entry point to enter this trend continuation pattern to the lower side. So using this replay bar tool, I'm just going to give you guys a real life view of how this chart played out. As you can see, price spiked upwards. The next candle it moved lower, so this is another resistance area then in this bear flag. Next candle it made lower, and as you can see over here, the closure of price was below this support area over there. Just delete this. So that would be your entry. So let's enter the market, put a short at closure there with your stop loss just above the most recent resistance area of the bearish flag, and your take profit area is usually the equal leg to the flagpole. So let's just make a copy of that flagpole. We put it over there, as you can see, and this would be your target, the same length as the flagpole. So let's just see how the market played out. Lower, looking good guys, it's going lower, aggressively lower. And as you can see, it reached our target area over there. And the thing with these chart patterns is momentum usually builds up, and then just aggressively continues in the direction of the chart pattern. So this was a really good trade setup with a risk to reward of 1 to 2.46, and it would have made you a lot of pips in this trade. So that in essence is a bearish flag, and keep an eye out for this pattern in the future. It's really easy to trade. just make sure that price closes below the most recent support area, and then enter the trade. Stop loss above the resistance. Target point is equal to the flagpole over here. Really easy, guys. That is the bearish flag. Let's go on to the next chart pattern, and this will be the rising wedge chart pattern. For you guys that don't know, rising wedge is a trend reversal pattern usually, and you also wait for a breakout out of the chart pattern, and price also usually moves in an aggressive manner. So this is the dollar Canadian chart on a 1 hour time frame, and to start drawing the rising wedge, you connect the bottoms of these candles, and remember, on the uptrend you connect the bottoms, and on the downtrend you connect the tops. And to finish this rising wedge, we draw it like that. And the essence of a rising wedge is it starts out big and then just gradually goes smaller and smaller and smaller until a momentum breaks, pushes the price in a certain direction. Using this bar replay tool over here again, let's just take it to that area. This is how you would have viewed price, and as soon as price exits and closes anywhere outside of this rising wedge, that would be your entry point. So as you can see, price went outside and inside again. There it closed outside. Next candlestick, it retests the bottom of the rising wedge trend line, so that would be a good entry signal. It closed outside of the rising wedge, retested, so you guys can enter short over here. Stop loss above the most recent swing high or the resistance over here, and the conservative target is usually to the start of the wedge. So over here would be a very conservative target area. So let's just see how price played out. If we forward a bit, look at this aggressive candlestick, and that is what happens with all of this momentum build up, and it usually goes aggressively in the direction where it broke out. You can move on. If you just continue, price came back a bit, back a bit. It was rejected here at this area over here, and just aggressively to the downside, hitting our target area, and we are happy. This is a good risk to reward as well, 1 to 1.65, and that explains the rising wedge. You guys just wait for candlestick to close below the bottom of the trend line. I would say this would be actually a better entry over here. This just confirms that price is outside of this rising wedge. It rejected the bottom twice, so that would be actually a better entry over here. Still a very good risk to reward, and as you can see, price even continued to make a move lower. So just a conservative exit would be the start of the rising wedge, but obviously you guys can take it to any risk to reward ratio you guys want to. So let's just close this real quick, and the last chart pattern is a triangle chart pattern over here. This is the same chart setup, the dollar CAD 1 hour, and a triangle, you just connect the highs like that, and you connect the bottoms like that. So just like a rising wedge, it starts out big and gradually goes smaller and smaller, and as momentum builds up, it usually breaks out of either, it can break out of the top or the bottom. And if we go, just let's take it to this area, this is how you would have viewed it. And triangles can go in either direction, and good areas would have been if price closed above this area or price closed below this area. So this would have been a good long setup over here with your stop losses below the most recent support, and then you can just pick your own conservative risk to reward area. So that's a long entry, or you could have gone short entries over here, stop loss above the most recent resistance area, and then again your target could have been anywhere you'd like. So let's just see how this played out. Played out like that, and then this is an aggressive candle, and obviously you don't want to enter at this candlestick closure here. You don't want to catch a falling sword, so the best move would have been to place a sell stop entry at this area over here. So you would have caught this trade over here, sorry, you would have caught it over there. The sell stop just allows you to enter price lower than the current market, so you don't have to worry where price closes. You enter conservative risk to reward. Let's just make it 1.4, and let's see how it plays out. There you go. Reach your target, and this is also a really good setup, and that is how you guys can trade a triangle breakout. And like I said, it can break out of either direction, so you could have placed the buy stop order above here as well, and then your sell stop over here, and then you guys would have caught this trade and you guys would have been smiling all the way to the bank. So that sums it up, guys. 3 really interesting and really powerful chart patterns that you can use in the market to analyze the market, and it really played out well, and these chart patterns are really accurate to trade, and I would say look out for these chart patterns in the future, and hopefully you guys learned how to trade them, and I will see you guys in the next video. Thank you guys for watching. Enjoy your day. Bye bye.